So I say that on Monday we don't have anything. On Tuesday we have a bank holiday for the Japanese yen. So expect some weird moves for the Japanese pairs. So on Wednesday, on the same Tuesday, during the New York session, we're gonna have a speech from the Bank of England. Then we'll be having Fed chair. We'll be talking. That is around 6 p.m. Kenyan time. Wednesday, we have a very important session. That is the CPI, Consumer Price Index, during the New York session. That is 8:30 a.m. the New York time, but it will be around 4:30 Kenyan time, 4:30 p.m. So it'll have some effects on the US dollar. The same Wednesday at 6 p.m., we'll be having the Fed chair also will be speaking. And then on Thursday, early in the morning, during the Asian session, we'll be having inflation data for the New Zealand dollar. Same Thursday, during the London session, we're going to have GDP for the pound. Then later on, during the New York session, 4:30 p.m. Kenyan time, we shall be having PPI for the dollar. So we'll have also some effects on the US dollar. Later, we'll be having unemployment claims data being released. Then we'll be wrapping up our week on Friday at 4:30 p.m. During the New York session, we're going to have core retail sales for the dollar. So that's what we have on our economic calendar for this week. So as you trade, you need to understand that we're going to have some impact on the pairs that have got the dollar either as a quote or as a base. So that is on the dollar. Now, if you check on what we have from the technical aspect, before I say anything, or before I proceed, I want to mention a few things that are very important, guys, when it comes to the financial market, just for the learning purposes. You need to understand as a trader, what do you really want from the market? Probably either from knowing your personality as an individual. I'm talking about probably either swing trading or rather day trading, scalping, whichever suits your personality as a trader. So you need to be very keen about that. So talking of that, it's very important to understand what timeframes are you supposed to analyze the market so that at the end of the day, you know what you are doing. You don't just wake up, get into the charts, you start analyzing, you say the market is buying, selling without knowing exactly what price levels are we in terms of probably either swinging or day trading. So it's very important to understand the aspect of time frame coordination when it comes to doing the technical analysis. Because if you understand that, it's easier for you to know how to manage your trades. Because if you can enter a trade, let's say you are doing day trading, you need to know why are you supposed to exit, all right? In terms of maybe if the market meets certain conditions, you need to know that you're supposed to exit a certain level. Or rather, if it's matters of take profit, if price is moving to your direction based on your analysis, you need to know when price reaches at a certain level, maybe you're supposed to take partials or you're supposed to put your stop loss at the entry so that you can trade at zero risk. If price maybe breaks certain level, maybe you know that it's now time for you to put that trade and so on and so forth. There's a difference between top-down analysis and also you have what you call down-top analysis. You can use down-top analysis to understand how liquidation process happen in the market even before you do the top-down analysis. Something that I'll be introducing to members in the community to really understand how it happens. Someone is making noise. Kindly make sure your mic is muted or we'll remove you from the meeting. Kindly. Guys, make sure your mic is muted so that we can have a smooth session. Those who have just joined us, I said this, if the meeting goes off, just click on the link and join back so that we achieve the purpose of this session this evening. So now, I think that is clear in terms of understanding the time frame coordination. Maybe to just give an highlight of what I'm saying, when it comes to swing trading, there are two main time frames that you need to focus on. We have the monthly and the weekly time frame for directional bias. Those time frames, they don't just change anyhowly. So you can use them to uh, come up with, or maybe to analyze and see the directional bias. Sorry for that, guys. I was a little bit distracted. Sorry for that. So I was saying this, when it comes to time frame coordination, there are two main time frames that you need to focus on. We have the monthly and we have the weekly time frame that can give you a direction bias that doesn't change easily. Then now, when you're moving from monthly time frame, there are things that you're supposed to see on the daily time frame so that you understand, are we going on with the main trend of the monthly time frame, or are we having a reversal, or are we having a continuation? Then the other sequence is from a weekly plot, you can use 4 hours to know that, are we on a continuation of the trend, or are we now getting into a pullback? So once you understand that, and also the aspect of liquidity, you need to see the strong areas. The strong areas of liquidities are the monthly areas, as well as uh, we have the monthly areas of liquidity, and we also have weekly areas of liquidity, right? I'm seeing someone is requesting to record. You'll have access to the record after the session, don't worry. So that is the thing. So, and then now when it comes to the daily time frame, now when you're looking for the trading opportunities, you also need to know, how do you coordinate your opportunities on 1 hour time frame, and then now you can go down to 30 minutes, 15 minutes, and so on and so forth. So as a trader, you need to identify areas of liquidity, even if you are doing day trading on 1 hour, and then you can get your confirmations on 30 minutes, 15 minutes, and maybe entries at 1 minute or 5 minutes. So sometimes when you're doing analysis and you're not able to identify areas of liquidity on those levels that I've mentioned, you don't need to force anything. That means maybe you're not seeing any opportunity. You let the market do whatever it wants. Are we guys together? Let me know if you're following on the chat section, or if you guys can, if you can still hear me. Guys, when it comes to Zoom, you must have a strong internet. So make sure you work on your internet, because if you don't have strong internet, you'll be struggling. If you are into trading, I don't see a reason why you should have an excuse. You should invest in internet and your devices, right? So, all right, I can see guys are following now. I think I've mentioned that. Now let's just jump now into the charts and get to understand what is happening. So if you look at what you have on the screen, someone to confirm if you can see my screen. If you can see my screen. All right, perfect. Now we have DXY on the screen, and I'll just go to the monthly time frame and help us understand what is going on. So if you look at the dollar index, um, in the monthly time frame, we've been bullish for a couple of times. Henry, what are you doing on the screen? Henry, what are you doing on the screen, my brother? I'm seeing what you're doing on the screen. All right. Make sure you don't interfere with the screen. So I was saying this, if you look at the monthly time frame for the dollar index, I want us to understand something. I'll try to explain for the purpose of people to learn this. So this was the most important level that we had before price started forming this move, right? Why? Because we had some liquidity here. So this, we call this point a reflex, or rather a dominated zone, where the market was ranging in the previous months or years, because all this has been happening a couple of months, because it's a monthly time frame. Now, When price reacted from this zone, we can clearly see that we have, sorry for that, we have a structure that looks like this. Price bought, came down, bought, came down, bought, came down, and then now it's buying. This is a liquidation process on the dollar index. And what the market is doing right now, it's going for the liquidity levels that are on the monthly area. And for those guys who understand liquidity, we can find liquidities on the weeks or on some other aspects that we know from the market. So if you move from the monthly time frame and maybe check on the daily time frame and look at that particular area at the top, you can clearly see that initially uh, that is a zone where this is a zone where sellers came in massively. So if you put your candles, there are people call this an order block. So if you put your line there, that particular area, that is around 112.142. It's a zone that I expect probably price to go and react from before it continues maybe to sell. So if you measure the number of pips from this particular zone, if you measure from where price is, if you look at that is around it's around let's say around 3.5% gain to the upside. Now, but before you go there, there's other things that will still happen on lower time frames like 4 hours or 1 hour so that it can facilitate the move to the upside. But again, as I always say, you need to be flexible with what the market tells you. Don't need to be like, oh, the market will just buy. No, you need to understand and read what price is telling you so that at the end of the day, this is where we are heading to, or this is the point that you're moving on from to that. And also, you have to consider the aspect of the economic data because we only don't focus on the technicals. The market is moved by the economic impact, or rather the economic catalyst. Are we guys following now? From the daily time frame, realize that I was able to see that from the monthly time frame, we can see a bullish bias to the upside. I'm actually talking about this. You can see a bullish structure. I see a bullish structure to the upside. And if you look at the liquidity areas, just on the same time frame, you can see that the last zone that we had technically, the last price level that we had where buyers took out seller was at this particular point. So to me, this tells me that right now, price is supposed to continue with the, we in the second, is it the second week of February, if I'm not wrong. So I'm expecting probably price to start forming a liquidation at this zone, and then it comes up there. And then from here now, we'll be able to know, are we going to continue buying or are we going to have a turning point? Are we together? So that now to make things simple and make all those story short. Now on the daily time frame, we are able to see this. If you go to 4 hours and 1 hour, what are the most important areas that we have? We have, if you look at how price reacted the other week, you can see we had, this was our, hold on just a moment. So whatever is happening, this was our last important zone that we anticipated probably price to hold if it had to continue selling. But now what happened? The market came and took out that zone. That is last week. Now, whatever is happening is a liquidation process. Price is coming back to where we had buyers coming in. And from this, I'm expecting dollar to continue being bullish. So in short, I'm trying to say that this coming week, I'm still anticipating the dollar to continue pushing upward. That is my from my end. Now, let's check on. So I'm bullish on the dollar. So let's check on pairs like Euro USD, GBP USD, and then I'll also talk about gold, and then we'll give others a chance also to share their ideologies or their opinions about the market. So if you look at the dollar, if you look at gold, commodity, the commodity, Uh-huh. I'll start with the monthly time frame to show you something. Gold right now it's in a critical zone because we don't have any previous reference points that can tell us are we on a certain level that we need to see price reacting. So we need now to apply logic and apply what we call pivot points so that we can be able to plot psychological zones in the market. So if you look at what is happening on gold, this monthly chart, for the last 2 months, that is January and this particular month, gold has been bullish. Gold has been able to move over, let's see how many pips. Gold has been able to move almost 2,000, 2,600 pips for the last 2 months. So for any person who got an entry at 26, 25 and they've been holding, they have been able to make good money. Right? Now, on the monthly time frame, you can clearly see that we are very bullish. Previous month, we are bullish. This month, we are also bullish. So from the monthly perspective, the major area of liquidity that we have, different price levels. The extreme one is at 26.48 and 25.84. Those are our major liquidity zones that we need to probably have consideration of using them as an important zone. Now, probably if price will be selling or pulling back, maybe we need to see a move from that zone. Are we together? But that is just a that is just a probability. So if you check on the monthly, from the monthly time frame, you check on the daily time frame, you can clearly see that. Let me show you the daily time frame. Remember, this was our monthly. This zone here, it's our monthly area of liquidity, right? But now, if you check on the daily time frame, so far so good. Other levels that we have that we see liquidity is 27.62 and 27.37. That's an important zone on the major liquidities because that is a zone that buyers reacted from massively up to where we are right now. So because we can't see a lot of things on the daily time frame, if you want to get to understand what is also happening, even if you check on the weekly time frame, you can only see the only last major area of liquidity that we have is on 26.48, where we had there. It is now validating the monthly area of liquidity. So what I'll do, can go to 4 hours and get to understand what prices are doing. So probably when the market will be dropping, these are zones that will be our first stop point. So we need to find a way how we're going to get a swing trade from the above areas so that we can go further and swing. Now, on the 4 hours chart, the 4 hours chart, we can clearly see also we have had a bullish trend. We've had a bullish trend. We've had a bullish trend that is on the 4 hours chart. Sorry, hold on, just a minute. On the 4 hours chart, just a minute. You've had a bullish trend. Now, for us to have an idea that the market is about to sell long term, we need to read and understand price action at where we are. So from my pivot points, the next area that I'm seeing as my next psychological zone is 29.20. Are we together? But from last week price action, you can clearly see that the last liquidity that you were left with was at around 20. That was around which level? Hold on. Was around this zone. That was around 28.45. Price came and reacted, then went up. This was a NFP effect. This was NFP effect, this candlestick that you're seeing here. So buyers bought, then sellers came in. So I know there are people who are liquidated. Majority of people are liquidated after they push to the upside. That's why we always say that price doesn't just move in one straight line. It has to liquidate some people. It's always simple. If you can't see liquidity, then you are the target. If you can't see liquidity, then if you can't see liquidity, then you will be the liquidity. Now, I'll look at the 4 hours time frame and try to see the logic, logically. Let's try to see this logically. whenever you see such kind of price action, price action, let me change this into a line graph. Whenever you see such kind of a price action, number one, for those guys who understand the aspect of formations, price engineered on the bodies, price has done what you call engineering at this particular area. Because the institution understands that now that the market is buying, people will focus on looking for buys. So anyone who bought this area from around 28.70 and maybe they were able to hold their trades, trust me. Okay, in the first place, the people sold at around 28.70, and then later on the market bought. And then again later on towards the end of business closed that on Friday, there are people who decided, now let's buy. Then maybe before they take out their profits, the market again sold. So that is an indication of liquidation to start. I mean, an indication or a trace to show us that liquidation is happening. Now, on the 4 hours, you can clearly see that we have liquidity engineering. Why am I saying that? If you look at this area, price was buying, right? Then came down, bought, took on the bodies, well, that's the most important one. On the bodies, took the last buyers that we had, and then after that, price did what? Price dropped. Then formed another formation. Now this is what you call transition, and then a transition with formation, and then price did what? Price dropped. When price dropped, it took all the orders that were here, or the buyers were here, they were taken out. Now again, price has done the same thing, gone up. You can see these, if you focus on the weeks, you'll be confused, but that's why I changed my chart into a line graph. So as far as I'm concerned, I'm now starting to think of selling gold, but the zones that I'm looking into, remember, we had NFP last week. So this week, tomorrow at 2, market tafunguka na gap. So we need to be very cautious. Personally, I'm going to time the market because I want to get some nice entries at around 3 or 4 a.m. Then I'll be able to ride with them, depending on the direction of the market. So once the gap is done, I'll be able to know where to enter. So for me, I'm bearish. Right now, I'm thinking of being bearish on gold from these levels, anywhere above 28.70. Because if I go further, actually, it can even be below the 28.70. If you go further, talk about liquidity. There's what you call an impure liquidity. Anytime you see price action playing at a certain particular area, it's about to make one crazy move. And as a trader, our work is just to get those moves and ride with them. So if you measure the pips from these levels, let's say 28.70s, sorry. If you measure the levels from 28.70s up to the next area of liquidity, that's around 600 pips. Trust me, if you get that entry, and even if you enter with a lot size of 0.5 on gold, you'll have to make around $3,000. If you enter with a lot size of 1, that's around $6,000. That's good money. Many Kenyans, they're being paid less than 200,000 Kenyan shillings. A few are paid more than 100 shillings. So that's not bad money. So it's your work to know where to enter. So for me, I'm looking for selling opportunities from this particular area. But the time that I'll be much more confident to have more sales, the moment price will come and trade below this zone. Let me show you. The moment price will come and trade below this zone, that is around 28.34. If I'll see any candlestick body closing below this zone, my work will be simple. I'll wait for a confirmation price to do the liquidation. I do time frame coordination, and then I'll have some long-term sales up to probably 27.40s to accomplish the monthly area of liquidity. We're just in the second week. If you do timing very well, you get a nice entry and you can hold your trade for the longest time. That's why in our strategies, we talk about time and price. So you need to know how to do the timing and know the best areas to enter your trade so that you can maximize on the rewards and minimize on the risk. So the meeting is about to end in the next 3 minutes. Once it logs you out, just click on the same link and resume back. That is my I thought on gold. So if price reacts tomorrow, I'm going to be looking for sales. But if we can't see any confirmation at this particular area, then we are going to wait for price to drop all the way to 28, 24 levels, and then we will use common sense to know where we are heading to. But for now, I will end it on gold by saying my most important zone right now is 28.70, and my next area of target is 28.20. If the story changes and we get a different scenario, then we'll be buying all the way to 29. That is on gold. So the next pair I'm going to look into is GBP USD. Of course, we started the monthly chart because we recently started the month. So if you look at the trend, price has been selling. If you look from the monthly perspective, we've been having some kind of bearish push to the downside, right? Been having some kind of bearish trend from the monthly time frame. That is on GBP USD. And as far as I'm concerned, if we come and focus on this particular area, just come and focus on the current market area or current price action from the monthly perspective, you can clearly see that. Explain. You can clearly see that price came and took out. Price came and took out buyers. Buyers came from 1.142, 1.1420 and 206 level, and the price went. But now when the market was coming down from the monthly perspective, what happened? It dropped, and we can see body candlestick close below that price level. That tells us still on the monthly time frame, we need to continue swinging, and probably price will come and maybe acquire all the liquidities this particular area. So the meeting is actually ending in less than 1 minute. So make sure you rejoin back so that we proceed.